Chicago real estate investor Seth Singerman has raised $500 million for his third and largest investment fund. Now comes the hard part, finding deals in a cresting market. Singerman Real Estate just closed on the fund, exceeding its fundraising target of $400 million and eclipsing the $275 million it raised for its second fund in 2015. The Chicago firm is already working on deals to deploy the equity, which could enable it to buy more than $1 billion in property, including debt. As with his first two funds, Singerman isn't targeting any specific property type or market, but is seeking out opportunistic deals, properties that might need some capital, a renovation or even a lifeline. After a long real estate bull market, the easy money days are over for investors, and the risk of being burned by falling prices has risen. "We're absolutely long in the cycle," said Singerman, managing principal of Singerman Real Estate. "Generally, real estate is expensive. However, across asset classes and markets there are pockets of opportunity. U.S. commercial real estate prices already may have peaked." A U.S. price index compiled by Green Street Advisors, a Newport Beach, Calif stock-based research firm, fell 1% in 2017, its first annual decline since 2009. But the economy remains strong, boosting demand for office, industrial, and other commercial space, and ultimately lifting property incomes. Still, some sectors have become overbuilt, which could generate opportunities down the road for investors that seek out distressed properties. "I do believe there will be more stressed and opportunistic deals in the next 2 to 3 years," Singerman said. "At some point, there will be some level of imbalance that it will create dislocation. In Chicago, for instance, developers are building more apartments, hotel rooms and office and industrial buildings than the market needs right now, though investors aren't pushing the panic button." Singerman Real Estate, which employs 14 people, doesn't own any properties in Chicago, but it is looking here, he said. Former investments in the area include office buildings at 100 North LaSalle Street in the Loop and next to the Westfield Old Orchard Mall in Skokie. The firm's funds own real estate all over the country, including a Marriott hotel in downtown Des Moines, Iowa, a warehouse in Columbus, Ohio, and an office building in Long Beach, California, according to Real Capital Analytics, a New York-based research firm. In its most recent acquisition, Singerman Real Estate paid $22 million for the Shops at Grand Prairie, a 493,000-square-foot shopping center in Peoria. Singerman, a former partner at Chicago-based Gem Realty Capital, founded his own firm in 2010 and raised $118 million for his first fund in 2013. He declined to provide data about the investment performance of the first two funds. Singerman also declined to identify specific investors in the third fund, which includes state and corporate pension funds, money managers, family offices, foundations and endowments. The Pennsylvania State Employees Retirement System agreed to invest $50 million in the fund, according to published reports. Real estate is still a popular destination for big investors, but the money isn't flowing quite as fast into private equity funds these days. Worldwide, real estate fund managers raised $109 billion in 2017, according to a preliminary tally by Prekein, a research firm. That's still high but down from the $126 billion raised in 2016 and the $136 billion raised in 2015, a record year, according to Prekein.